My name is Deepesh Patel, editor at Trade Finance Global. Asian economies, helped by friendly regulatory regimes and bullish investment in technology platforms, have often led the way globally when it comes to buoyant trade growth forecasts. However, the blow dealt with the COVID-19 pandemic risks many previously booming economies entering a recession. With the length and intensity of the downturn, today we'll be considering the implications across a wide range of countries and also key industries, as well as considering the risk of more isolationist trade policies and trends such as techno-nationalism. Today, I'm joined by Asia Pacific Chief Economist of Natixis at GTR Asia, Alicia Garcia Herrero, also Adjunct Professor at Hong Kong University of Science and Technology, to discuss some of these key things. Alicia, welcome to Trade Finance Talks.
It's a pleasure.
So to start off with, quick introduction. So in no more than 30 seconds or less, who are you, where are you from, and what do you do?
Well, I'm from Spain. I've been working in the financial industry for over 30 years, 30 plus. Also in central banks globally, so European Central Bank, the Bank of Spain, etc., and international institutions, the IMF, the BIS, all of these different places. And out of that background, which is kind of public and private, I've never seen anything like COVID-19, I have to say. I still remember, the first missions at the IMF where I was seeing countries with financial needs coming out of the debt crisis, the Latin American debt crisis. So in the early 90s, so it was already, a little bit better. And debt was much lower than it is today. The structure of the financial sector was less complex. The role of foreign investors was just a few banks here and there lending, but not, bond issuers, bond investors, and, a much more complex universe of investors. So for many, many reasons, and no matter the experience, I feel like dismayed at the, at the size of the shock. I also actually lived through the Asian financial crisis of 97, first at the IMF and then for a private bank, Banco Santander, who dared invest in Asia right before the crisis. And I again, even that crisis, I feel, which was absolutely massive, I think it'll pale compared to what we are seeing today. This is a massive event, so I'm very happy that you're taking this on board, because it's very important for the world and certainly for Asia.
Thank you. So at a high level, how has COVID-19 impacted growth in key Asian markets, given their rally in recent years? And how does this compare on real versus relative terms?
So it's a great question, because it's all about real versus relative. So in absolute terms, Asia has been severely hit by COVID-19. So you have countries whose average growth has been hovering around 5%, Indonesia, the Philippines, India, even higher. Now seeing recessions. Like for the developed world to see a recession is, of course, a huge problem, but nothing compared to a country without a welfare state and used to a 5% average growth, as you can imagine. So basically the size of the shock is humongous, but on relative terms, it's still smaller than the West. And one could wonder why. Overall, of course, India is very big, but in terms of still cases per million or death per million is still smaller than other countries. So, like developed countries. So my own, for example, Spain. And you wonder, why is this the case? And, let alone why the cases, let's start with the cases, are larger. You could argue, these are social norms, distancing, and, habits, the role of elderly, many, many things that, put it this way, on the short run, we can't control. So let's take that as exogenous, number of cases. So let's take it as at least the the first shock. And Asia has had overall fewer cases. And most importantly, the size and duration of the lockdowns, which we can measure, in practical terms by any type of mobility indicator, the usual ones we always use, Google, etc., are actually smaller than the West. So the shock in terms of cases is smaller, and the response, at least sanitary response as regards mobility, also smaller. So that already in itself explains why the shock, the ultimate outcome, at least immediate outcome, is smaller. But the monetary and fiscal response of Asia is also smaller than the West overall, especially if you exclude Japan, Korea, and Australia, the most developed Asia. But China is smaller, although the actual amount of fiscal stimulus in China, nobody really knows, because they don't necessarily portray it in the way we do. So they may do it, but they don't announce it or measure it on the fiscal as a fiscal package. But overall, it's smaller. So the key question is, with a smaller stimulus, how can the outlook in terms of economic growth still be smaller? Very simple, because the shock and the mobility both have been less affected. The mobility is less reduced, and the shock in terms of cases is smaller. That's the trick for that relative better performance. But it's only relative, because in absolute terms, so far the projections for growth in 2020 are minus 3.8%. That's ours, and the IMF hovers around -3, which is more than the Asian financial crisis in 1997. It's not about the global financial crisis of 2008. That's a joke compared to the size. So put it this way, relative terms, who cares? Yes, some do, like investors, but if you are sitting in Sri Lanka, I should not go there and tell them in relative terms you're better, because it's not going to fly. So it's a massive shock, put it this way. It's just a simply massive shock.
Yeah. So what sectors have fared the best and been the most resilient? So for example, energy, financial services, tourism.
Yes. So we've worked on this, as I mentioned before, quite accurately, because I wanted to be sure that my a priori was really, like the obvious thing you hear is actually shown in the data. So we went through all of the indices for all of the Southeast Asian economies, China, Korea, Japan, North and Southeast Asia. And interestingly, we found, or maybe not interestingly, because it's the obvious thing I'm going to say now, that of course, medical material, ICT were the best performers. And you can see that actually affecting the outlook for some economies that are very dependent or very reliant on these sectors, such as Taiwan. So Taiwan has done wonderfully in terms of the stock performance, but also in terms of economic outlook, is going to end the year on a positive note for sure. And that's very different from Japan or even Korea, etc. So the sectoral concentration in digital, ICT, and medical devices has helped. The third sector that has performed very well is staples. So basically, obviously, anything like food consumption, anything that is retail staples. And the worst performers are energy, financials, airlines, and hospitality. And as it should be, if you think about what this really is, it's of course heavily affected. Yeah, and it's across the board. It's a very interestingly, I feel like, well, beyond the rally we had in China and the US, kind of let's call it geographical rally, the rest is very sectoral. So most there's no like geographical pattern. It's more the sectoral pattern, in other words, dominates stock market performance during the COVID-19 period, because it's obviously a very different shock across sectors. Some benefit, like ICT or chip components, semiconductors, blah blah blah. But of course, anything that relates to services, especially physical services like hospitality, are severely hit.
Thanks, Alicia. So in terms of markets, are there any particular winners or losers in Asia, or do you think we could see many markets enter into a recession in coming months?
Yes. So yes, it's very virtually we just have the ADB Asian Development Bank outlook, which is of course more official than ours at Natixis, but it's very similar. But overall, it's just all red. I mean, it's like every single country except for country or economy. I shouldn't say country. Like as I said, China, Taiwan, Hong Kong is red, Singapore is red. India is red, Philippines is red, Indonesia. And it's like. But again, I mean, if you are a country like India or Indonesia, red means something different than the West. It's just a different ball game, because you don't have the fiscal cushion or the welfare cushion to avoid, the unavoidable consequences of an economy in recession for a population without, unemployment benefits, blah, 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 yeah? So it is extremely worrisome, in my opinion. And then I would add that the very low, let alone negative growth across the region means something different if you can afford to finance your fiscal stimulus. So if you're Korea, if you're Japan, you're Australia, you can of course smoothen somehow smoothen this impact, this negative impact. But if you're Sri Lanka, or if your debt, stock of debt is already close to unsustainable, and we find that in the data, the fiscal stimulus is not there because you can't afford it. So the ultimate recovery that we should be seeing out of the stimulus, like like in the US, if there's a second package, especially, everybody is upgrading the growth projections for 2020. But why? Because of the stimulus. But if many Asian countries don't have the space, there won't be such a quick recovery whatsoever. And that's, I think, very worrisome, really, let alone the likelihood of a debt restructuring because of, the inability to repay, the unsustainability of a stock of debt, which was thought to be sustainable at growth rates hovering 5% and are now negative. No debt can absorb that shock, if you ask me, If it's very, very temporary, but since you can't do fiscal stimulus, it's not temporary. And that's when your debt becomes unsustainable. The more so, and we've been quite lucky so far, but I worry about this one. The more so if you cannot keep your interest rates low. So far, when I say we've been lucky, what I mean to say is that there's been no such thing as a massive risk premium. I mean, and I mean to say generally, even in the credit market, yes, sovereign yields have remained relatively subdued. But imagine suddenly creditors really, we go back to a risk-off environment, then it's a question of months. It's just that thanks to the fact that the much lower rates, or the Fed saying, sorry, wait for me for 3 more years, I'm not going to do anything, I want to keep low rates at 0. I mean, that helps massively because emerging economies can afford, Asia can afford very low rates. But for how long? It's not only about the Fed, it's about the risk environment in the global economy. We're all betting for a vaccine, and the Fed continuing to ease, or at least keep it as it is, and probably the US doing one more stimulus. But if any of these three stop happening, I think it's really debt sustainability, even in Asia, not generally in Asia, but for quite a few countries, will become an issue.
Yeah. Okay, thank you. Let's talk about supply chains and actually the rise of global value chains all around the world, which have been hugely prevalent in Asia. What's the role of China in these supply chains, and are other markets competing for market share?
Well, we've been working on this for quite some time. We started working on the idea of China's centrality in the global value chain as something that had been actually underestimated before COVID-19. So we actually have a few publications showing that first, global value chains are shrinking in size. This is one of the mirrors or ways to measure deglobalization of the real economy. But while global value chains are shrinking in size globally, the largest reduction is in Europe, followed by the US, and much further away with hardly any reduction in China. So China's linkages with the rest of the world have been increasing since we started looking into that, which was, if I'm not mistaken, like early 90s. So that's the beginning of the story. Now everybody wants to know, is this going to continue? So is China's centrality going to even increase because of COVID-19? One factor is because the rest have been on the decreasing mode for some time, the pull effect from China will be such that even, if there is some suspicion of excessive concentration of risk, not suspicion, but reality actually, you can't change it. And that's one possibility. But I frankly think that for sector or for companies who are not in China for China's market, there is a massive push to pull out, to reduce the risk, because you've basically learned that you may not even be able to operate. And it's not about geopolitical risk only, it's really about unobservable risk, whether it's a tsunami, whether it's an earthquake, and I think that's quite important for companies, let alone the geopolitical situation. So in other words, so far I would argue we've seen the increasing centrality of China in the global value chain, but exactly because of that, because of the kind of a tipping point before COVID-19, let alone what we saw in COVID-19, I think companies were starting to kind of understand that it was too many eggs in the same basket. In fact, manufacturing FDI into ASEAN has been bigger than manufacturing FDI into China since 2017. And I'm not talking globally, I'm talking about those who really know these two ecosystems better, the Koreans, the Japanese, the Taiwanese. These investors into manufacturing have already, since 2017, preferred, or at least in terms of overall investment, manufacturing, preferred Southeast Asia. So I think that trend is there to continue. That's not reshoring, that's nearshoring. For Europe, maybe nearshoring is a big word because it's still very far, but near from China. So basically, reducing the centrality of China to somebody else in the region. And the obvious winners are Vietnam, but not only. Malaysia, actually Malaysia, it's quite impressive how much Malaysia has actually gotten more integrated in the global value chain. So there's some winners out there, and I think there's so much room because, again, the centrality of China. So even one bit here and there can make a big difference for countries in that region. Yeah, so I am a bit fan of Southeast Asian economies for as manufacturing platforms. The big elephant in the room is India. But for India, I mean, I can give you some numbers of the size of trade or even global value chain is like not even a tenth of that of China. So why isn't it happening already? One would have to look at, what are the constraints and so on to understand whether India can be a big winner. It's a big question. I think it's a very important question, but the fact it hasn't happened yet shows that it's not only about China's centrality, meaning it's something about India's own constraints, if I may say, that is really not leading to the attraction of FDI into manufacturing.
Yeah, absolutely. So let's continue the question, the themes around China, and actually move into geopolitics and talking about some of the more isolationist trade policies, the rise of techno-nationalism. How has the US trade war impacted Asian markets, and how are they responding?
This is the thing. It's a very, very important question. This is the thing, and I just wrote a piece on dual circulation in China, which is part of that story, because we see the isolationist policies of the US very clearly. I mean, we all know about those because they're trumpeted, and I like that word because that's exactly how it happens. But we tend to see less those from China because they are, I wouldn't say hidden, but they're under the veil of a very sophisticated, jargon. And dual circulation is that type of jargon. Dual circulation, and now, I mean, when I wrote that piece for the Nikkei, I thought, somehow, is it me seeing it that way, or is it everybody? And when I got comments from many, many Chinese scholars, and then I could feel, wow, yes, that's what it is, because they even acknowledge that that's what's happening. And the justification of that, the interpretation of dual circulation, which is very simply import substitution, is such that, but didn't you want to export anyway? I mean, didn't you want to export high tech or to China? You mean in the West? It's quite natural that we don't want to import anymore because we fear being dependent on something you can cut at any time. So you see that the idea of isolationism comes from both sides of the equation, but from China it comes not as a push factor, I want to contain you, but as a protection from somebody else's containment, which could justify, quote unquote, that self-reliance, which is the other way to look at this. So that self-reliance, what does it mean for Asia? That was your question, really. And interestingly, the dual circulation, this is like the blood circulation. It has two. So one is, I protect myself from whom? From imports from the West, basically. I'm not protecting myself from importing iron ore or copper, for that matter. No, because that's not a product that brings me down in the value chain. I can still import, but continue to move up the ladder. What I need to stop importing the minute I'm ready, though, is semiconductors or anything that could be cut off, and I would be dependent on the West, basically. So I think on energy, China is already, controls many of the sources of, generally on commodities. So that's not a problem for China to depend on. But for everything else, China will cut off imports. So for Southeast Asia, whoever exports, that's the point. Commodities will be fine. And China will continue to export. That's this dual circulation. The export part will continue. As long as you accept my exports, I'm fine. But that doesn't mean I will import from you. I will only import from you if it's something I can certainly not produce yet. The minute I can, I'll go ahead. So for Southeast Asia, I still think China needs to keep that, first for exports, and second, to keep a backyard, to continue to produce. So I think the impact on the rest of the world will be much bigger. So I think the largest loser, Germany, followed probably by Japan and Korea, because although it's Asia, it's North Asia, but Southeast Asia, I think, will be part of that story. As I said, a backyard to export to and import commodities, that kind of thing. Yeah,
very interesting. So I guess just drawing this really excellent insight to a close, what do you think we can expect from this region in the coming months? And have you at the bank changed growth forecasts in response to recent events in the near to medium future?
Yes. So we've slightly improved China because the data have been relatively positive since the second quarter, to 2.2% growth in 2020, 7% 2021. But here's the news. upgrading China from 1.5 to 2.2 in 2020, frankly speaking, it's not going to change anybody's life. I mean, what is important is to know what will be 2022. Meaning, because now everything we see is kind of, sorry to say, fake. Why is it fake? First, we have a shock that varies across borders, so it's huge here and not so there, and thus magnifies, the economic impact of COVID-19 in a very random way. Yeah, I mean, if you are heavily affected or not, it just changes your outlook massively because of the lack of mobility. But the point is, then you have the stimulus, so everybody, jumps back. But the point is, what is the structural impact of COVID-19 on any economy? And in my opinion, the whole world will move to lower growth than would have been the case by 2022. Why? Because everything, the role of the state, we see this in China massively, but everywhere, will increase. So zombie companies, more state-owned companies, blah, blah, blah. So that's negative. We were talking about this before we started. Human capital, education, all of that is negative. Very low interest rates, nobody willing to invest. What for? So, all of the forces I can think of. Some people say, oh, but we'll be more productive because of online work. I mean, frankly speaking, there's surveys already for France. I know of some surveys of the impact of productivity of COVID-19, labor productivity is massively negative, minus 15%. So I can't think of any force that is pushing up productivity. And thus the long term, and this is for Asia also, the long-term prospects for Asia on a post-COVID-19 world are actually much worse. Now the question is, worse than the rest? I mean, the relative. Maybe not relative, but if I'm somebody that wants to get into the middle class in Asia, I don't care about relative. So we also need to realize that the starting point is difficult because there has been a dream, I mean, Asia will bring out of the poverty, I don't know how many million people. This might no longer happen. So that's kind of the key weakness I see, because we've always thought that this was a kind of a linear trend, for Asia. And I think what COVID-19 is bringing is a sudden aging of the population, meaning, look about surely birth rates in 2020, 2021 is going to be massively low. And then, this population that you don't have welfare state, you don't have room for that. Productivity is collapsing. I mean, it's very negative. I think, frankly, I don't know whether I would go all the way to say derailing the Asian century. That's a big statement because, again, the West is not any better. But again, for any Asian individual, it's more about the promise of, leaving poverty, or at least, like below middle class to middle class and above. I think that might actually not happen for as many people as we thought. And that's a big change for anybody operating in Asia. If you are a massive, investor in retail, or that what you were expecting might not really happen. So that's why I think I'm quite negative on the structural point of view of the post-COVID-19 world in Asia and everywhere for that matter.
Alicia, I'm afraid that's all we've got time for, but thank you very much for joining me on Trade Finance Talks TV and discussing, how the Asian markets are faring, the role of China, the importance of India, and also what we could expect, not in the next year, but also in the next couple of years. Alicia, look forward to speaking to you next time. Thank you very much.